Hey, welcome to Trades by Bren. Welcome to the channel. In this video, I'm going to show you one of my most powerful strategies for trading. You can use this on any time frame, any chart, and it's taken me about 5 years to learn. And what I'm going to show you in this video, you can use to make money. And it's one of the most profitable ways to do that, trading. And you can use it on any chart, any time frame. You can trade anything you want. It works on all markets. I'm going to show you a variety of different markets. I'll take this strategy, I'll explain it for you, break it down simple, step by step. Then we're going to look at the Bitcoin chart, which I have up right now. We're going to look at the a Forex chart. We're going to look at a futures chart, and we'll look at stocks. I've got the Apple chart put up as well. So we will look at a lot of different time frames and a lot of different charts, and I will show you how this one strategy can be used in anything to trade anywhere. Now, what is it called? It's called the 50% pullback rule. The 50% pullbacks. Most traders know that they should wait for the market to trend and then buy the dip. It's called buying the dip when the market pulls back. But the rules here are very important because no one exactly knows how to do it and when. With trading, the key is when. Because unlike long-term investing, we got timing that we have to figure out, and that's really tricky. So if you look at this chart in front of you, one thing you can see is that the market's going up. Now, trading against the trend is the easiest way to get screwed. You don't want to trade against the trend. The trend is your friend. However, how do you actually trade with the trend? Most traders know they should trade with the trend. If the water's moving, you just hop in. Remember, you know those like lazy rivers? If you've ever been to a water park, it just carries you away. That's what we want, but with the money. So how do we do that? Well, I'm going to show you, you can use this rule. It's called the 50% rule. So the number one thing that we need to determine if we're going to buy the dip effectively is we need to be able to tell the difference between when the market's trending and when it's not. You know, a lot of times it's just going sideways. We call that a trading range. It's either trending or ranging. The market's in two modes. Think of it as two different gears. Okay? All right. So the chart you're looking at, let's just look at it and let's break down this rule, the 50% rule, so you can trade this effectively. So the simple explanation is this. When pullbacks are going more than 50%, you can assume that the market is going sideways and not in a trend. However, as soon as the chart, whatever you're trading, starts reversing at 50% pullbacks, then you can assume that the market is trending. Now, let me show you exactly how to implement this rule, okay? It's one of the most exciting things I've ever discovered. And when I started seeing it on multiple time frames and multiple charts, I was like, wow, this is amazing. So I'm very happy to share this with you. Now, we're going to use a tool here, and it's important that you have this tool pulled up on your trading view. Why am I not showing, by the way? You guys probably want to see my face. Let me add my face. Yeah, let me add my face here. There we go. All right, let's go like that. And let's go like that. And we'll put me right there. Okay, so you need a tool. So pull up your trading view and follow along with me. And here's the tool that you want to pull up. This is a measuring tool. We're going to use it that way, okay? It's let's see what it's called. It's called forecasting. No, it's called data and price range, okay? So if you go down to the first, second, third, fourth section, click this one with the arrows, and it'll give you this tool, okay? Then we're going to go here, and we're going to go to okay, let me just do that again in case you missed it. We'll go to options, okay? And then we will uncheck everything. Literally everything. You don't need anything. The only thing we need is the little 50% mark, and that is right there, okay? So whatever you measure, this will show you right where that 50% marker is, okay? So notice the first thing I said. We're going step by step here. So step one is, if we want to trade with the trend, we got to know when the market's trending. Often the market's not trending. So if you try and trade the trend when the market's not trending, you're going to go into a heavy drawdown and you're going to be screwed. So How do we determine whether the market's trending or not? As I said, when the market is pulling back more than 50%, we're going to assume that it is not trending. Okay, so here's what I mean. What are we going to measure? We're going to look for a big move up, and then we're going to measure it from top to bottom, from the extreme low to the extreme high. So check it out. Notice, here's a big move. So we measure it from the bottom to the top. We just move it to the right a little, and it shows you that 50% mark. So if we are watching it and the market's here, when the market comes down here, and then it goes all the way down here, and then all the way down here, and pulls back more than 50%, in fact, 100%, and keeps going lower, and then it reverses, but still, that means the market is not trending. So what we're going to do is we're just going to wait for a big move. We're going to be real patient, and we'll wait for a big move. So if there's a big move here, well, we waited, and it didn't really come back 50%, but then it really did come back 50%. So we're still waiting. Then you get this big move, and it goes up, and let's just leave our measuring tool there. Okay. And we can see it comes down. So I'm going to mark two things. One, I'm going to mark the 50%. And two, I'm going to mark the big moves up. Those are the two things that we need to really pay attention to. You can ignore everything else. You know, you need to be able to know what to ignore in trading because there's so many things and you can get lost in all of it. So let's just put a little arrow whenever we see a big move up and we'll measure it. Okay. Now let's look for another move up. There's one. Okay, cool. So let's measure it. We'll mark it first, then we'll measure it. Step one, mark the big move. Step two, measure it. Okay. So from there to there, right? From the very low to the very high, price came down, came down, came down, came down, came down. Oh, came right past that 50% mark and then reversed up. Okay. So this is the first time that this rule has been met. And notice it didn't meet it here. If we measured this one, you can see it definitely didn't meet it there because we went up and then we came all the way back down again. This looks almost identical to this, right? Okay, cool. So as you can see, as we move along here, this time we did have a 50% pullback. Now, keep in mind, it can be a little bit above or a little bit below. So we can't be rigid about this. Otherwise, it's not going to work. So we'll have a small margin of error. Okay, which means it could be a little bit more than 50%. And as you can see, we went a little bit past, but look, not very far. We stopped right at that 50% mark. We went one candle close past it and then reversed very strongly. And notice this is a strong reversal because this candle closed above that candle. So here's our first 50% pullback. So that's awesome. So let's just keep going with this and see what happens next. Now the rule works like this. We patiently hang out and we wait for 50% pullbacks to start holding. So if we're trading this chart, that's when it starts, okay? Now, we're not going to trade this because we didn't know it was going to happen. So we waited, and then we saw that 50% mark go all the way. Okay, so then we're going to wait for it to happen again, and then we're going to take action. So if I'm watching this, I don't see any move up. I don't see any move up. Now, this starts slowly moving up, okay? So this is the first time that the price starts moving up. But what I want is a big, strong move up like this and a big, strong move up like this. So we're just going to ignore this. And then when we see this, then we'll measure that. Okay. So now there's two ways to do this, but we'll do it this way first. Okay. From that low to this high, we can see that the price shot straight up. Okay. So that's where we would start to look to buy longs. So if we were to take this chart and we were to trade it exactly in the way that we're saying, then what we would do is we would put our order here, our limit order, and we would wait for the price to come down to that 50% mark, and then we would get tagged into that trade, and now we're making money. Now it reverses on us, comes back down, but that's okay because what we're going to do is we'll look at the closest candle and we'll put our stop loss below that candle. So if we entered here, our stop loss, let's move this out of the way. If we entered here, our stop loss would be here. And notice the price didn't hit our stop. So this was our entry, right? Okay. Right here. So we're in the trade now, and our stop loss is right here. So as you can see, went down, tagged us in, went up, then we went down again, got very close to our stop, yet didn't really cause us any problems because now we're making money again. As soon as we get past this line, now we're back in profit. So that's awesome. But this gets even better because what we can do is we can see what happened on this pullback. And if this pullback followed the rule again, then we can actually add to the trade. We can take profits and enter again, or we can add to the trade. So check me out. If we measure from here all the way up to here, remember from the very low of the move to the very high of the move, that would mean our 50% mark would be here. And as you can see, the price didn't even get there. So as I mentioned, we want a little bit of flexibility on the top, a little bit of flexibility on the bottom. So as soon as we went sideways, we broke out again. And check this out. If we measure that move from the low all the way to the high, then that means that the price has to come back down here to 50% and reverse. And if it did that, then we would say, okay, let's actually buy again. So notice, down to 50%, bounces out. That gives us just enough time to put our profit target, to put our limit order rather, right here. Okay. And then this candle comes down, tags us in, and moves up. So now we're making even more money. And then check it out. We can do it again. Price bounces. We measure from the extreme low to the extreme high. And then price comes down and reverses just above 50% and then really comes down, right? Now, mind you, I said we put our stop loss here. So that would allow us to get out and protect our risk. And as you can see, if we keep going, the price then heads down and we can actually do the same thing, but in reverse. So once the price goes back and forth a little bit and we start getting lower highs, we can see that just like here, the price moved up, 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 up. Now the price is moving down, 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 down. So the same rule applies. So let's say after we get this move down, let's measure this move down, okay? 50% would be right here. Notice we went right back to where that 50% mark is and turned down. Okay, so once we see that happening, then we know that we are trending down, right? So that would allow us to then employ this strategy again. And that's really how it works. So how do you know if the market's trending? Simple rule. If it is making 50% pullbacks, we assume that it's trending. If it's going more than 50% when it's pulling back, we assume that it's not trending. Now let's see about this chart. As you can see, we were looking at, let's see, we're looking at futures, I think, right? Yeah. Okay, cool. No, we were just looking at Bitcoin, okay? So now let's look at Forex. Same idea. I want to show you guys that when we're getting the 50% pullbacks, we go all the way up and we go all the way back down. Market's not trending. However, now we're starting to move up. So once we start to move up and we start seeing higher lows, then we can start employing our strategy. So if we do it here, as you can see, 50% mark is here. Price went down right to that 50% mark, bounced out, which gives us just enough time to place our order there, and then moves up. Okay, great. And then it moves up again, and we measure it again, and then we put our limit order at 50% again. And guess what happens? The price comes back to 50%, goes a little bit below, and then takes off again. Okay, so you can see how that works. So the rule applies that the same rule applies, and we just keep applying it and applying it and applying it. The first way we apply it is to know when the market's trending. The second way we apply it is when to start entering at 50%. And the third way we apply it is when to stop trading the trend, right? Because if the price pulls back more than 50%, then we call it quits. And that's how you avoid overtrading and all the other kind of messes that can happen, like forcing trades. You just follow a simple strategy. And as long as you're consistent, your results will follow. You have to be consistent if you want your results to be consistent. So if we look here at Apple, now mind you, this is a completely different market. We just looked at Bitcoin, then we looked at the euro versus the dollar. Now we're looking at Apple, and look, 50% pullback right here. Okay. Okay, we start getting higher lows. We assume the market's trending. Price comes down to that 50% mark, which is right here, goes a little bit past it, goes sideways and shoots up, right? Perfect. Okay, awesome. Then it comes down. We measure that move from bottom to top, comes right down. Look at this. It came right down to the tick to the 50% mark. You see that? That candle came right down to where that 50% mark is. Amazing, right? And then we move up again, go sideways for a little bit, and then we move up again. And again, if we measure 50% and we watch this, we're going to put our stop loss at that leg. We call that a leg. So it would be the signal where the move started. I mean, you could put your stop loss here, or you could put your stop loss here. It's really up to you. But if you enter here, pick a recent candle close to where your entry is and put it at the low of that candle. I like this stop a little better, but maybe you're more risk intolerant and you put it there. So if you enter here, you get stopped out here. Now the price is reversing and then we stay out. So it's a rule that works, that you can just wash, rinse, repeat over and over and over again. And that's why I like it. Trading can be very complicated. It can be very confusing, and it can be exhausting because, people lose money, and it's easy to lose money, and to learn usually takes, it always takes losing some money. That's the reality. So, okay, that's the lesson. It's pretty simple, right? It's not complicated. I wanted to teach you guys something very simple so that if you're a beginner, you can follow along here and really understand how to do this. And I promise you, you can, if you don't believe me, try this on a 1-minute chart, a 5-minute chart, a 1-hour chart, a 15-minute chart, any time frame, anything you want to trade, try it. I promise you, well, I'm not going to promise you anything. You just see for yourself. I mean, I just showed you with Bitcoin, Euro versus dollar, and Apple, and S&P 500 futures. So, you can see I'm not making this stuff up here. Now, I'm going to take some questions. So if you have questions, put them in the chat. If you have questions about this strategy, or if you have questions about trading in general, ask away, and I'll do my best to answer you. Okay. All right. So Zion8303, what's up, Zion8303 in the chat? Say it one more time. What do you want me to say one more time, my friend? Be specific, and I will explain it for you. All right. And Ayush asks, how much you need to start day trading? I really want to learn and start, but not sure how much I need to start. Well, you can start trading with a prop firm for say $50 to $100 a month. And then you can use their capital and you don't have to risk more than $100. So if you use a prop firm, very little. All right. Shout out to my man Grish from India. He said, thanks. You're welcome. What are your questions? If you have questions, ask them in the chat. If there's no questions, all good. Yeah. Okay, so Zion likes the explanation. Yeah. I mean, it's pretty awesome, right? Like 50% pullbacks may be the coolest rule of all time. And, I can show you some more examples if you're curious. Like, I mean, maybe we can even do some practice trades here if you guys are interested. Yeah, why not? All right. So, okay, let's actually look at a live chart. Okay. So this is the MES, S&P 500 minis. All right. So let's apply the rule. Okay. So remember, we said 50%. Again, wait for a big move like this. We measure it, right? And then we wait for the price to pull back. And as you can see, it pulled back. As we showed you on all those charts, it goes a little bit past the 50%, and then it reverses and heads down. Okay, cool. So this would be a trending market. based on our rule. Now let's measure the second one as well. So I'll put a check box, right? Let's just do a little check box. Where's my brush? Let's see here. Okay. Hold my shortcuts bar. Hide options. Whatever. Okay. So let's do some practice trades, okay? So let's try this. Let's actually, you don't want to practice. You can't, it's silly to risk your money when you're practicing, right? So if you're going to practice, you want to make sure that you're using sim. So for whatever reason, it's not working, but let me actually pause the video for a second. Yeah. Okay. Let me try and restart this. And we'll do some practice trades. Okay. I know what happened. I got logged out. Yeah. All right, let me just log in here and we'll do our practice trades. And again, ask your questions in the chat and I'll be happy to answer them for you, okay? And if you want to review the 50% pullback rule, go back on this video and rewatch the beginning, okay? Just trying to log in here. Just give me a second. Okay, and we are in there, baby. Back in. Okay, great. Starts loading. Okay, awesome. So much better. All right, I was feeling kind of lost there without all my indicators. Okay, so again, the rule I just showed you, okay? 50%, boom. Comes back to 50%, heads down, awesome. Wait for another big move up, boom. Here, measure it again, okay? This time, since we had a 50% pullback, then we actually enter at 50%. So that will be our entry, okay? And then, you know, let's say you just take your profit at the low close, which would be like right there, okay? So you made money there, made money there. Well, no. This was our first sign that we're trending. And so pull back to 50%. Then we waited for the next move down. Then we entered, okay? So then that's one trade in the bank if we entered there, right? So the first one was that one, right? So that was our indicator that said, now trending, okay? Awesome. Now trending, and then do what? Wait for the next big move, then buy the dip. Okay, we call it the buy the dip strategy. Why? Because you're waiting for that dip, baby. And you just dip that, baby. You just dip your little grubby little hands in there and pull out some money. Okay. You just wait for that dip and you just reach in there and you just take those grubby little hands and you grab that money when it dips, right? So this tells you trend on. Next move, next big move, wait for that 50% pullback. You know, if this is our entry, we took a small drawdown. Again, I said put your stop loss at the most recent candle close, low or high, in this case high. Price goes down. The low close is always a good place to take your profits. So, awesome. That's really how it works, okay? So let's do some practice trades now that I've explained it to you, okay? And to do that, we need to pull up our practice account so that we can actually trade. So let's do that. So now we have our practice account on. And let's find something, man. Let's find something. Let's look at euro versus the dollar, okay? It really does not, you're going to see, it really doesn't matter what it is, okay? Let's pull up a 2-minute chart. Now, if I pulled this chart up and I said, okay, I want you to tell me, is this chart trending or is it not trending? Because if we're going to buy the dip, we need it to trend. Let's apply the rule. We're practicing, okay? Wash, rinse, repeat. Wait for a big move. Wait till once we start getting those 50% pullbacks. And okay, this is the first big move, right? From here to here, went straight down. And notice, definitely 50% pullbacks. I mean, we didn't even get close, right? You just went sideways and then went down more, okay? Next big move is where? Right here. Can you guys see this or is it just me? Do you see how this is a big move down? Then we went sideways and then this is another big move down. Do you guys see that? Okay, so if that's the case, then we need to measure this guy, right? From this high to this low, okay? And check it out. We went up, 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 up. We didn't even get to 50%. Okay, cool. So that means the market's trending. Awesome. Cool beans. So then we know, I mean, this looks very similar to the last chart we looked at, doesn't it? I mean, look at that. You put them side by side. Doesn't this look so similar to this? I mean, I don't know about you, but that looks very similar. I mean, let's try and like just isolate it a little more. See that? Doesn't that look so similar? Really does, right? Now, why is that? It's because these charts follow the same patterns. That's why. So look at what's happening now. I don't see another big move down, right? So I'm chilling on this. I'm not going to trade this because I want a big move down and then I want to measure that 50%. If the market starts going like this, then you can assume that you shouldn't trade if you're trying to buy the dip, okay? Because this is a buy the dip strategy. And when it looks all mashed together like that, like mashed potatoes, you got to stay the hell out. Otherwise, you're going to get chopped up and all that money's going to go bye-bye. So when you have to be able to tell the difference between like, look, I could teach this to a 5-year-old. Do you see big candles? Hey, little 5-year-old, you see these big bars that are really big and lots of them and they stack up like Lego blocks? Okay, that means trending, okay? You see little teeny tiny ones where the blocks or the bars are small and they have these big tails on them. They look like wicks of a candle or a piece of string. This means the market is not trending and you stay the hell out. And because I use these indicators, I know this is a support area. That's what happens around a support area. That's why I have those indicators on my chart, okay? So we can see that the market's going sideways at I think this is the 60-minute moving average, most likely, okay? So yeah, so this, we're not going to trade it, right? That's not what we want. Now let's take a look at Bitcoin, but let's drill down to like, I don't know, a two-minute chart. Let's try a 2-minute chart. Okay, a lot of charts moving down. Look, very similar to the ones we just looked at, right? We just went from futures to euro dollar. Now we're on Bitcoin. Totally different market, right? Totally different market. Okay, cool. So look, we can employ our strategy. Big move down. Hell yeah, baby. From the very high to the very low. Check it out. We came right back to 50% and now we're going sideways. So, okay, I think that's pretty decent. You know, I mean, it happened here. Let's check the rest of them out, okay? Price went down, came right back up to 50%. Look, we got one close above it and then up, went sideways and then headed down, okay? So let's just keep applying the rule. If you're bored, I'm sorry, but you know, Making money is not boring, is it? So calm your tits. Okay. Now, obviously, we didn't get back up. This moved down. We just kept going straight down. Okay. So this strategy works for big, obvious moves, as you can see. And that's why I'm sharing it with you, because that's why it's good for beginners. So one of the things, though, I'll give you one advanced note. Okay. So this is something. Okay. I'm getting some calls for gold. We can definitely try some gold. No problem. Okay. Let's go to MGC. Is it? Yeah. Micro gold futures. Okay. Okay, cool. All right. Yeah. Gold's been going nuts, huh? I've been trading gold. It's so fun. Okay. So what we can see on gold is we had big move up, and then we've been going sideways. Ching, 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 ching. But then look, we got another big move up here. Okay. So right now, it doesn't exactly fit the pattern, right? So we could wait, or we could trade it and just assume that the price is going up because, well, I mean, look at this. If you've been following gold, which I have, it's just going crazy. It's at all-time highs. Think, right? Yeah, look. This is the daily chart of gold. Okay. This is a daily chart of gold. Okay. This is April. This is right now. Okay. That's insane. All right. So basically, this is a daily chart. 1, 2, 3, 4, 5, 6, 7, 8 consecutive bull bars on the daily chart. And if we drill down to the 2-minute, we just went from the daily chart to the 2-minute chart. We can see, yes, we pulled back. Okay. But now we're going higher. All right. So that means that no matter what you do, if you buy and hold, you'll probably do okay. Right. But I wouldn't buy this because I'm teaching you a specific strategy in this video, and it doesn't fit the strategy because look, we need a 50% pullback on a recent move. And as you can see, well, we don't have it. Okay. So we need to see the market pull back, and then we need to buy the dip. So this is the buy the dip strategy. For this, well, maybe it'll happen now. That'd be awesome. All right, we'll keep watching this. So shout out to my man, Grish. Yeah, I'm doing the 2-minute of gold, but maybe it works on a 1-minute. No, see, we're just channeling up. But yeah, I got no problem with the 1-minute. In fact, the 1-minute might actually work better. Okay, so yeah, actually, you know what, Grish? This does work better. So check it out. We got our big move up here, right? Pull back to 50%. That actually works perfectly. See, that's the 50% line. Look, we didn't even get there. Okay, cool. So all we're essentially waiting for now is for a pullback so that we can get in, right? We need a pullback so that we can get in. Price didn't get to 50%. So we can either just buy the market or we can wait. But I'm going to stick to the rules because with trading, chasing the price and kind of like bending the rules is a really good way to get screwed. So I'm going to show you guys an example of just being patient and being disciplined, because those are the two things you need when you're trading. You know, it's too easy to just kind of like bend the rules. And when you start doing that, things go downhill. Okay. Now let's answer a question. We've got Ghost Futures Trading in the chat. He's asking, doesn't the white background burn your retinas? No, I love it. I think it looks so clean. You prefer to look like you're in some sort of dungeon? Like you just took the red pill and you entered the Matrix and you're about to see Neo and the Oracle? Is that what you like? You like looking at like some sort of dark dungeon sort of chart thing happening? To me, those black charts look like you're in some sort of dungeon. Okay, so anyways, this is a perfect evidence of what I'm showing you. Look, 50% mark was here, right? Came back, went up, came back, went up, came back, went up. In this case, I just showed you the daily chart. This is gold. It's insanely bullish, very, very highly bullish. Okay, all of the candles are above the moving average. Okay, that means that the buyers are extremely aggressive on this chart. And so in those cases, the price will not even pull back to 50% because traders are so confident that the price is going higher, they'll buy any chance they can get. Look, every bear bar, there's buyers. There's one bear candle and the bulls buy. One bear candle and the bulls buy. Anything bearish, the bulls buy it. So that's how you know the chart is highly bullish. But what that also gives us an opportunity to do is to be patient, because like, let's say this turns into a big move, right? We'll even start to draw it out. Okay, we'll even start to measure it. So we'll assume that the bottom of the move's here and the top of the move's going to be, I don't know, somewhere up here. Okay, so just like this or just like this. Okay, so we'll just follow it and we'll be patient and we'll wait. Okay, so there's your move. So 50% would be here. So that's one possible option, right? And if we're trading, let's get our practice going. Okay, cool. Then we would buy right there, right? And our stop loss would be where? I told you I like it here at the bottom of the leg, okay? And then I'm not going to set the profit target. Actually, we'll set the profit target as well, okay? So to set the profit target, what I like to do is keep my profit equal to my risk so I can get in and get out fast, right? I can hit and run, baby. All right. So then if we have 14.5 points on the bottom, then we want 14 points on the top. All right. So then that will put our profit target right there, right? Now, as you can see, that didn't work because the price is exploding up. Okay. So then what we'll do is very simply, we'll just adjust, right, to the high of that candle and be patient for when the pullback comes this time. Okay. And what we can do in that case is try it there. Okay. Again, stop loss goes here, right? And then you can actually just use a measure move. That means our profit target would be here. Okay. All right. So let's see if that works. Again, we're looking for something like this. You know, a few candles up and then pulls back. Let's see. All right. Ask me more questions. Ask me more questions. I don't have all day. So if you want to ask me a question, ask it in the chat. Be your last chance. And I wish I had music. I always used to play music on the live streams. Again, 50% is right here. Will bulls buy this candle? If this candle is like this candle, and this candle, and this bear candle, and this bear candle, then they may buy it. But also, what we're looking for is something like this. So we got one bear candle here, and then we got another bear candle. Then the price went up. So that's what we're looking for right now. So we got one bear candle, and we want another one right here. That would just tag us in just enough, and then reverse up, just like we did there, okay? So that's what we want to see. But this market is so bullish, it doesn't look like it's going to happen. Bulls are just buying, okay? So as you can see, sometimes you just need to adjust your strategy. Like in this case, you know, you could just adjust and you could buy less than 50% pullbacks, right? However, one thing I've noticed about this strategy is if it doesn't work immediately, sometimes if you just set it and forget it and come back later, you know, your trade gets filled and everything works out perfectly. So that might actually happen right now. As you can see, the price is heading down. So let's see if we get tagged in, and that would end our live stream. Okay, perfect. Okay, so We're pulling back to the moving average, looks like, which is exactly what we wanted. Okay. And now we're in that trade, which is awesome. Okay. So I hope you've enjoyed this video. I hope that you've learned something, and I hope that you go and test this out in your own time so that you can see the reality of 50% pullbacks and how they are just incredible, and they happen so often. And it's one of the most useful things that you can learn as a trader. And I'm telling you, you can make a lot of money with this strategy. Like, look, I just applied the simple rule and already we're heading into profit. Like, it's just amazing. Like, if you know what half means, if you can process and hold the idea in your brain of 50%, if you went to school for long enough that you learned what 50% means, and you understand that 50% is half of one, and you can go into TradingView and you can pull up this tool and you can change the settings and turn off everything and just use this as 50% and then do what I told you, boom, just like that. You can make, if we're trading live, you could have just pulled that $50 out of the market just like that. It's amazing. Okay. So let's just say, okay, I just made $100, right? Like, obviously we're practicing here, but it's that easy. Sometimes it's not that easy, but if you apply a specific rule and you're disciplined and patient, this is what can happen. Now, to do this consistently takes a lot of hard work, but that's the video. Enjoy it. Test it for yourself. If you have more questions, ask them in the comments, and I'll see you in the next one. Thank you for watching.